So where did we stop last class? We were discussing on doctrine of lifting of corporate will, right? That was the last content we discussed, I remember. Am I right? So I need to start from registration of a company. Types of company is also done. Okay. So I need to start from registration of a company. Again, this is again a basic concept of. So we are not dwelling into CMA inter or CA inter syllabus. These are basic concepts where we'll learn with the basics and other things. Till MOA and AOA is basics on. Okay. So registration or incorporation of a company. When you go for the characteristics of a company, we find that a company is nothing but an incorporated association. Remember one of the characteristics? When we say incorporated, it should be properly incorporated, which means it should properly follow the procedures of all the declarations to be filed, affidavits to be filed, and what are the forms to be filed, what are the documents to be submitted as to form a company, and everything has to be done. Okay. Follows from Companies Act. Okay. So either you call this as registration or incorporation of a company. After giving all the documents, after following the proper procedures, register of company will take the company to its record and a certificate will be given for this evidence. And this certificate is what you call a certificate of incorporation. Actually, when we talk about evidence, we say an evidence called as conclusive evidence. Have you heard of this term? Not might be aware of this conclusive evidence. What do you mean by conclusive evidence means? Example, you can take certificate of incorporation. Once the certificate is given by the registrar, by the MCA to the company is formed. For example, X, Y, and Z, all the three already have discussed this case. Please try to recall, okay? X, Y, and Z, three people, three persons, that may be a company, one may be an individual or anything else. All the three join and they subscribe to the MOA. You remember what do you mean by subscribers? Subscribers to the MOA means they give a promise that they will subscribe at least one shares of the company. Okay, subscribers we say them. Subscribers to MOA. They sign accordingly, and this signature gives a declaration, gives a promise for them. Once the company is incorporated, they'll buy the shares. See, there is no company at all. When the company will be incorporated? Only after it is taken to record is incorporated. Only after issuing certificate of incorporation, it means it's incorporated. But what these three people do, they sign saying, I promise to buy after the incorporation. Promise to buy at least one share. So this is how the statement will be. Now, XYZ has signed to this MOA. They have subscribed the MOA. Subscription clause will be there. They have subscribed to the MOA. Now, before the certificate of incorporation is issued, all the three passed away in an accident. Which means what? There is no X, there is no Y, there is no Z. But the company is in existence because certificate of incorporation is being given. This is what you call as conclusive evidence. What do you mean by conclusive evidence is once it is being produced, it is in existence. Okay, it's conclusive. No other doubt. When a certificate of incorporation is produced before a judge, before any authority, there will be a mention of the date from which date this company is in existence. The date of incorporation will be there. From that date, company is incorporated and no other question may be asked except doctrine of lifting of corporate. See, doctrine of lifting of corporate also, they are not saying there is no company, they are just checking what is behind the company. They are just lifting the veil and checking. So they need to check whether the company is in existence or not. Okay, how they will check? They'll see the certificate of incorporation. They'll check for the date. So they'll say that from this date onwards, the company is incorporated and no question can be raised on this incorporation. The full authority is given to the ROC. What is ROC? Register of Companies. This full authority is given to Register of Companies. Nobody can doubt this certificate. This is what you call as conclusive evidence. Okay. Conclusive means it's done. It is following as per law. Even though X is not alive, Y is not alive, and Z is not alive. Okay. Whatever happens to the subscribers doesn't matter. What happens here? It's a conclusive evidence. It's clearly stated. Conclusive means no doubt to be raised on this content. Okay. So we'll go for registration or incorporation of a company. First time in the Companies Act from 2013, we have this definition for promoters. What will call as promoters? Okay. Actually, when we talk about defining a company or starting a company, usually we need three set of persons. One is the person who gives the capital, shareholder. One person need not give the money, need not provide the capital, but he will provide his idea to incorporate what type of business can be done and so on. So that person who gives the idea will be called as the promoter, but he need not manage the company, or we just assume he doesn't know how to manage the company. I may have money, I need not know how to manage the company. I have the idea, but I need not know how to manage the company. So this person who is a shareholder, he gives the capital. Most of the time in terms of money only. Sometimes consideration other than money can be there. Okay. Probably he might be giving his building, or he might be giving his business contacts. It can be anything. Usually we take it as money, or we can use the word as capital also. Okay. Promoter, what he does, he gives the idea. Because of this promoter's idea, only the companies. I think if you go for the MOA clause, we'll be discussing on the object clause. What is the scope of the company? What is this business to be? What is the company is going to do in the future? What is the business of the company? When we discuss about the scope or object of the company, definitely whose intention will be reflected here? The promoter's intention. Because he's the one who is giving the idea. He's the one who's promoting this can be done to the company. Okay? And who's the third person part? Directors, the management team. We'll call them as board of directors. So that's why we say separate management. Okay. All these three people join to form this company. Actually, these people are joined. Promoter may not be a subscriber. Again, there's a one problem whether promoter and subscriber are same. No. Who's a subscriber? Please try to remember. Already we have discussed all these terms. You remember subscriber, member, shareholder, contributory. We have discussed all these terms already. In addition to this, please add this term promoter. Promoter is the person who is defined in the Companies Act. Subscriber is the person who has been named in MOA. If his name is there in subscription clause of MOA, then he'll be called as a subscriber. Automatically, he will be called as a deemed member of the organization. It will be automatically entered in the records of the company, register of members book. If it is not there in the register of members book also, you need not worry. It is taken for deemed. Deemed means what? Automatically he comes as a member of the company. Okay. So it's a beautiful concept. So who's a promoter? The person who formed the company or who conceived the idea. He may be a subscriber, he may be an investor, he may be a shareholder, any position he may be. But he is the person who has formed the company. He is the reason for the formation of the company. His name will be named in the prospectus. He will be identified in the annual returns. So if you go for referring section 92, Section 92 says you have to define or you have to give the names of the promoters. It's a mandated one. You have to give the names of the promoters. If anything happens to the company, and when there is a process where you have to lift the corporate weight, whose name has to be listed? Automatically the promoters will come. Because they are the thinkers. They have just thought this is the business of the company and the company is doing the business. The company being an artificial person, it will not know. Okay. So identify in annual returns under section 92. Person who has control over the affairs of the company. So he is the one who is doing it. And the board of directors, obviously, because of the advice and directions of the instructions of the promoter, they follow it. Okay. And the person who has taken steps for registration will also be called as a promoter, but not in professional capacity. If a CA or CMA or CS are incorporating a company, they need to certify. Okay, they are incorporating a company. They will not be called as promoters. I am a company secretary, I'm incorporating company, 100 companies I have incorporated, which means I am a promoter of 100 companies. No, because I'm doing it in professional capacity. CA, CMA, and CS. All the three join together and they start a audit firm, company, okay, private company. Now tell me, they are promoters or not? They are promoters. See, professional means I'm not talking directly with respect to qualification. Please try to understand. Professional capacity means for incorporating this XYZ company, somebody has to authorize, that is, somebody has to certify. Who's certifying this? This CA is certifying, or CMA is certifying, and CS is certifying. Is there any other link for the company apart from the certification? There is no link, right? If there is no link, means he is completely acting in professional capacity. Here, the other case which I discussed earlier is myself, CS, your CA, your CMA, we all joined together to form a company to doing audit and other things, consultancy. So we started together, not in professional, obviously we are professionals, that's different, not in professional capacity, but as the promoters of the organization. See, professional capacity means who are completely dealing as professional for certified, who has authority over it. Okay, can please make a note of this one. This was asked once or twice in the exam. So these lines define whom we call as promoters and etc. Okay, Canada Companies Act 2013. Shall I take over? Formation of company. Yes, you might be knowing all these things are simple. Public company, we need 7 or more subscribers or members. See, you're all law students now. Okay. You should be very strong with the term subscribers and members. Before incorporating the company, 7 subscribers. After incorporation, 7 members. Okay. If it falls below 7, the other 6, probably there are totally 7 persons. Let me name them as A, B, C, D, E, F, and G. 7 altogether, they form a public company. Okay. We cannot call them as members. Why we cannot call them as members? Because the company is not yet incorporated. With no company, how can you call these persons as members? There's no company at all. You cannot call them as members, right? Is it okay? So these persons will be called as subscribers to MOA. Now the company is formed. How many members should be there in a public company? Always 7 members. Now comes the word members. Okay. So how many members has to be there in a company? 7 members has to be there. Okay. Now please check. One person B passes away. How many are here now? Only 6. If it falls below 7, within 6 months, the remaining all the 6 should bring in 1 member inside the company. Because if it is not brought, it is against the law. The company will go for strike off. Or it will go not only for strike off, along with unlimited liability for the 6 members, it will go for strike off. That's a government's decision. The central government has the authority over that. So within 6 months, they have to bring the other persons. Okay, so one case I'm discussing where B passes away. B dies. Second case. Here, B doesn't want to hold shares in his name. So what is? B transfers the share to some person L. Okay, now tell me. What happens? Is this still a public company? No doubt, public company. Because once it is incorporated, how many members we have here? 7. Instead of B, it is L. Let me go for the third case. B is one of the member, and for convenience sake, we'll take that each and every person has subscribed for 1 lakh rupees worth share. Okay, so totally, what's the authorized capital? Okay, okay. Let me take as total authorized capital 7 lakh. From this, B transfers only 50,000 rupees worth share to L. Only 50,000 rupees worth share. How many members are here now? Simple calculation. Okay. B is called as a member or subscriber. He is first a subscriber only. What law says is, he has promised, he has given in the declaration that at least he will take 1 shares. That's what the meaning of the subscription clause is. Even though he's not taking the shares, it becomes his liability that he has to pay for the shares. I think I discussed this concept. You remember we discussed this concept called as commencement of business, certificate of commencement of business. I discussed this one. From the date of incorporation, within 1 month, a board meeting has to be held where a bank account has to be opened and statutory auditor, first auditor has to be appointed. This will take place in the first board meeting. 6 months within the date of incorporation, 6 months within the date of incorporation, these 7 persons, they might have subscribed for 10 shares, 20 shares. See, the 7 lakhs is the total paid up capital, that's the authorized capital. But they might have subscribed for just 10,000 rupees. So how many thousand has to come? This 70,000 has to be the paid up capital. This 70,000 rupees should be in the bank account. Within which period? 6 months. Within the 6 months, the board of directors, the management team, because they need to start the business, they are the proper person to start the business. So this team has to file a certificate, file a form called as certificate of commencement of business. Okay. Now tell me, who is we here? Subscriber or member? Even though he becomes a shareholder, even though he's become a member, Because his name is there as a subscriber in MOA, he will be called as a subscriber of leave. Subscriber having somewhat heavy weightage on this role. Okay, even though it's associated with this business or not. Because once we use the term subscriber, automatically he becomes a member, deemed member. Okay, member itself is a very good weightage, like. And if we say deemed member and subscriber means it's clearly adding more weightage to the role. Okay, now tell me, subscriber and promoter are same. Actually, if you go for the definition of the Companies Act, they are not defining subscriber separately. Only definition is given with respect to MOA only, but promoter is defined in a different way. So if you go for a key look, subscriber and promoter may, in or most of the cases, it may be seen. Because their name will be mentioned everywhere, even though it's not alive. His name will be mentioned over. Is it okay? Can you please make a note of it? So let me carry over. Incorporation of company. You need to file the documents for. There'll be an MOA which has to be signed by the subscribers. Don't write it as members. Okay, using the members in the MOA is a silly word. You should not use it. You have to use only subscribers. And there should be a declaration given by the person who is involved in formation and who are the proposed directors. See, you have to use the term proposed company name, proposed directors. Okay, proposed register office. Why it's named as proposed? Because company yet to form. See, company is not yet formed, right? Company is yet to be formed. Then, with no person alive, how can you talk about the person? Yet to, which means proposed. Proposed director. Okay, which means what? Those directors will be there where they will be called as directors only after incorporation. Okay, so proposed directors, officers or proposed secretary. So these persons will be giving the declaration. Along with that, subscribers and directors will be giving a declaration with respect to what? Saying that we have not committed any offense. Okay, we are not found guilty of fraud or misfeasance during this 5 years. And the documents which we have filed are true to the best of their knowledge and belief. Along with that, you have to give the address for register office and what you call as the correspondence address. Okay. What's the difference between the register office and correspondence address? Correspondence address is probably XYZ. They all together they form a company. They want to form a company and the proposed name for the company is XYZ. Okay. The company is not yet formed. If there is a company, there should be a register office of the company. Purpose is the service of notice. If any letter is to be sent, to whom you will send it? To the company, to which address? To the register office address. The company is not at form, so they don't know what to do. So what the director X does is, he gives this address as correspondence address. So till the company is formed, if you need any communication further or you need any clarification further, you can please approach me. That's about X's correspondence address. But once the company is incorporated, from the date of incorporation, which is stated in certificate of incorporation, within, I think, 20 days, you have to go for giving the register office. Okay, so that's about the register office. Now tell me, in memorandum of association, which address will be there? Register office or correspondence address? Register office only, don't get confused. Actually, in fact, there will be no address at all. Okay, how many are totally not new to Companies Act? Not new. Not new, which you have studied earlier, right? If you go for the subscription clause, name clause and the situation clause, there will be no address present in the MOA. Okay, what will be present? What will be present? Situation clause. Situation clause, where the office is located. What will be present? Abba, don't think too much about state alone will be presented. You will not have the full address and all. So while doing MOA, you will never have the address in the MOA. You will have only in which state the office will be located. Okay. So there is no need of giving register office during the time of incorporation. But after it is incorporated, I think it's 20 days only. Within 20 days, you have to go for filing a form saying that we have this register office over here. And you have to send this GPS location with the director sitting in this director room. Okay. Okay. And the particulars of the subscribers and the first directors also will be provided for. After providing all these documents, this is the first step. After providing all these documents, there will be a certificate issued by the Register of Companies called as Certificate of Incorporation. Along with the Certificate of Incorporation, there will be a SIN number printed on the certificate saying this is the identification number for the company. SIN number. all the copies of all the documents or what are the things you are given as a record to the MCA, everything has to be held in register office till its dissolution. You may expect this as a 1 month. There are register of members book. For how long you have to maintain the register of members book? Till the dissolution. All these records, MOA, AOA, and if you make any amendments, how long you have to maintain in the register office? Register of debentures, how long you have to maintain? Only 8 years. These are all may be expected as 1 mark questions. Okay. And fourth step, if you are furnishing any false or incorrect information or suppression of material or fact, what do you mean by suppression? Is not, you are not giving the 100% fact, which means you are hiding. Suppression means you are hiding something. In that case, you will be levied penalty, which is a criminal section 447. It's a criminal liability section. Please make a note of this one. This is quite very, very, very important. At the time of incorporation, all the person will be liable. Once the company is incorporated, promoters, first directors, and the persons who have given the declaration alone will be liable. Is it okay? All persons will be liable. Promoter is there. Yes, he is covered under all person. First director covered under all person. All the persons giving declaration. Whom do you say calling declarations for? Subscribers, directors will be liable. So both looks like same point, right? Then why they have to mention as all person here? The professional who are in the professional capacity, who authorize or certify, they will not be liable. Their job ends once the company is incorporated. If any query is raised, if any resubmission has been asked, then they will carry over. That's it. At the time of incorporation, all the persons are liable. Hope you remember I was discussing this one concept called as conclusive evidence, right? Once a certificate of incorporation is being provided by a register of companies, it means the company is registered. It becomes a company. It comes into existence in the eyes of law. Yes, the company is incorporated. Now, as a professional capacity, you're relieved. Because you're not in a professional capacity, your job is over. See, even during the time of doctrine of lifting of corporate veil, whose status will be checked? Not the professional persons who are signed. Whose status will be checked there? Subscribers, promoters, and others. See, this professional capacity person who are a CA or CMA or CS just to check only for incorporation of a company. It's one of their role. Okay, it's one of their role. Okay. Yes, sometimes it goes to the orders of the tribunal. Tribunal is NCLT. It may be passing such orders. Probably it may be asking you to go for unlimited liability case. Okay, even though the liability may be a limited liability, but the NCLT may be asking for unlimited liability and the name may be removed or it may be asking to wind up or whatever it may be. Okay. We have specific E form called as SPICE plus form. S stands for simplified, P pro forma for incorporating, I C company electronically. Usually E we write it as small e only. Okay, electronically plus. Actually, when you go for registration, once the date is declared, yes, it gets all the characteristics of a company. You remember all the 15 characteristics? Incorporated person, voluntary association, separate management, separate property, capacity to sue and be sued, etc., etc. All these will be incorporated from which date? The date once it is mentioned in certificate of incorporation. Okay. I incorporated a company. I believe actually I means not I. Okay. So yeah, please join. So effect of registration, it becomes a conclusive evidence from the date of incorporation. The date mentioned in certificate of incorporation, it exercises all functions of a body corporate. Okay. We can refer these case laws. I'm not discussing as of now. What is the difference between SPICE form and SPICE plus form? Actually, it's an outdated concept because earlier we had SPICE form, which is not having plus here. And now we are having the SPICE plus form because we are integrating all the 10 services, like we are going for the EPF services relating to labor laws. See, earlier we had this PAN, TAN alone. Then we are incorporating GST. Once a company is incorporated, we can get the GST number. We can open the PF account. Everything can be done during the incorporation itself. Okay, it's all interconnected. So all the three central government ministries and departments are interconnected. Okay. Effect of MOA and AOA, yes, it binds the company and its members and money paid by members is a very, very important part. You have to understand, please understand in a logical way. All the subscribers sign in the memorandum of association. Okay, obviously the company is not incorporated. They are incorporating the company. It's their wish how the company can be incorporated. The company is incorporated, okay. But what about the members of the company? It's like offer and acceptance case only. So you might have done in Indian Contract Act. There is an invitation to an offer. You offer it, and the company accepts, which means the company goes for issuing the shares, and you become the members of the company. Okay. Once the company has accepted, once you have given the offer, the company has accepted means you come for a legal binding contract, legal binding agreement. In that case, once there is something called as MOA and AOA of the company, obviously the company and the members have to bind. Company will bind to the members, members will bind to the company. Company will bind to the members. Because if the members wants to change any clause of MOA and AOA, then they can do it. Why? Not only for changing the clause of MOA and AOA. If they want to close the company, they can close the company and do it. So company buy for no members of the. Okay, the other way. They have subscribed or they have bought the shares saying that whatever the company does will say okay. Which means was members will bind to the company. But it's not directly happening between the company and the members. Please understand, it's not directly happening between the company and members. It's happening through the MOA and AOA. That's why we call this MOA and AOA as the chartered documents. Okay, it's the main documents of the company. And once the company is incorporated, we have this concept. It's a separate legal entity. So money paid by a member will be considered as a debt. Okay, so the loan can be provided by the member to the company and by the company to the member. Is it okay? Shall I take over? Yes, share is a normal definition. What do you mean by shares? A share in the share capital, which means it includes stock also. And it's a proportion of interest. Usually it will not say share as bundle of money. It will say share as bundle of interest. Okay, what are the interests you get? When a dividend is declared, you get the right to collect the dividend. When the annual general meeting is about to be held, you have the right to get the notice. If the notice is not being given to you, not service, then the annual general meeting becomes void. You know this? Anyway, we'll discuss in a later period. If a notice is not wantedly given to a member of the organization whose name is there in the register of members book, then that meeting becomes void. Law says this has to be provided. The service of notice has to be provided to each and every member of the company. Okay. So, what do you mean by interest in the company? It's not a sum of the money, it's rather than an interest. Interest is all the rights pulled down. Okay, you can just refer this case law, board and trustees. Can you please go through this one? Would like to take over? Usually, if you go for the nature of shares, it will be called as a movable property and it's transferable as per the AOA. Once a company is incorporated, we say that shares are easily transferable, freely transferable, but that's only for public company. When you talk about private company, it's not freely transferable. There will be some restrictions for transferability. For example, we have these three persons, X, Y, and Z, where they have incorporated a private company. Okay. What company is this? Private company. For convenience sake, for a private company, how many directors we need? Three directors. So for convenience sake, what I'm doing here is I'm considering all the three persons as subscribers. So obviously they are the members of the company now. And along with that, I'm just planning them to have the directors of the company. It's all their own company only. Now X, what he feels is he wants to go out of the company. Okay. Yes, he can go out. But you have to check with the AOA because he has the shares, right? What the Articles of Association provides here is if it happens to be a private company, then the one person who wants to go out has to ask the other two persons whether they are willing to get his shares, whether they are willing to buy the shares. Because when we say it's a private company, we say it's a closely held company. Closely held means it's very rare situation that public will be allowed inside. Public in the sense another one person. If A is coming inside the company, till A is coming to this company, he'll be called as a public. Am I right? Right. So, if X wants to sell the shares and go out, first he has to ask whom? Y and Z only. If they're not willing to buy the shares, then X can sell to A or B or whoever he likes. Okay. In case if he's a director of the company, okay. So in my case, I'm keeping him as a director and subscriber. He wants to sell all the shares, but he doesn't want to leave his directorship. Is this possible? This is possible. Everything is possible in private company. Even in public company is possible. Okay. So let me take over. So movable property includes debenture also. So probably debentures we are not discussing immediately, but still in the later period we'll be talking about debentures. Then we'll say that it is also movable property. Usually the shares will be given a proper numbering. It will be distinguished by distinct numbers, but is not happening in the case of demat shares. Demat shares is maintained as demetallized form. So it is in soft copy mode. Okay. We'll go for kinds of share capital. Shall I take over? Okay, these are all simple concepts. Equity share capital, which has usually when we say equity, the equity shareholders get the rights over the shares. The rights can be voting rights or there's maybe sometimes called as differential rights. Differential rights may be differing with respect to dividend or voting or whatever it is. Probably you can refer this example. Tata Motors in 2008, they issued equity shares with differential rights where the name for the share was given as A equity share. With every 10 A equity share, one voting right will be carried over. So there is one voting rule called as 1:1 rule. If you have one share, one vote will be given. This is the normal rule. Okay. If it's a differential right, if you hold only 10 shares, one voting will be given. That's what you call as for every 10 A shares, A is a name for the shares. Okay. For every 10 A shares, it carries only one voting right. Okay. Will you buy shares in this company? If it is not Tata Motors, because of Tata's name, you might be buying. That's different. Will you buy shares? If I am there, I will not buy. Okay, so what you're going to do? You'll give me 2 chocolates, which means what? You give me 5% more dividend. So what the organization, what the management says is, you have 10 shares, ma'am. We'll give you one vote. Am I getting benefited anything because of this? If I'm getting any, because after all it's a contract. If I'm getting any benefits only, I'll spend money in this, okay? Because I'm going to have 10 shares, which I'm going to bet money for 10 shares, I'm getting only one voting right. So what happens is, the organization has decided where 5% more dividend will be given. If for other shareholders mean what? One share, one vote. So those shareholders carrying in this ratio, if they get 2% dividend, how much I'll get? If they get 10% dividend, how much I'll get? Voting achi adachi. Pana vanda podum. Okay, so 15%. See, automatically, somehow or the other I should get benefited, right? Okay, and moreover, one concept is there. Now, what ஏதாவது மாற போதா கம்பெனில? If you're holding shares in Tata Motors or Ambani company, it's because you directly go personally sit in there and you go for voting. Is there anything going to change? You're going to hold maybe in worth of amount you may be saying lakhs and lakhs you may be holding, but the number of shares will be some 0.2%, not 2%. You're just holding 0.2% shares. It may be lakhs and lakhs, but the amount percentage of holding is 0. So if you vote in favorable or if you vote against, anything is going to change there. So what I can happily do, take the dividend count. That's it. Okay. So if you find any opportunity of buying these type of shares, please accept it. Okay. But it should not be a crorepati at that time. Okay. Okay. If you are a millionaire or billionaire, then it's different. Okay. Now you are just holding some thousands of rupees, and then your case is different. Okay, let me plan for this 5% extra. It's my hard-earned money. I have the decision-making power on my money. Okay, right. So you can check for future retail company and Zian irrigation company. Okay, and we have this concept called as preference share capital. Okay, we have seen any balance sheets? Anybody articleship trainees work here? You have seen the balance sheets? If you find any opportunity of seeing the balance sheet, else you can see the balance sheet of Tata company itself. You will find where you find this share capital clause. That is the item in the balance sheet. We'll call this a space item, right? Here, right? Okay, okay. So preference share capital will be taken under share capital only. So you have two types of capital. Can you help me out? What are the two types of capital? One is share capital and one is debt capital. Okay. Under share capital, we'll be discussing equity and preference. Under equity, we have two types. Just now we have discussed. One is with respect to voting rights and the other one with respect to differential voting rights. So this is how it goes. Voting and another one with respect to differential voting. Everything should be clearly mentioned in the balance sheet, which means no stock outs. Okay, usually this will carry the number 3, I think. Under the notes stock outs, 3 or 2. It depends on which type of topic. So if you go for the share capital clause, it may be equity capital or preference capital, or you can go for debt clause, which means debt capital. It will be debentures and other cases. Okay, I'm not going for this part now. Let me go for directly preference share capital, which means they have the right to participate in the proceeds during the winding up. Okay, they'll get a preference. When we go for equity share capital concept, it's a general concept. When we go for equity share capital concept, this is applicable for company limited by share, where all the share capital will be considered as equity share capital except mentioned as preference share capital. If it is mentioned as preference share capital, we cannot consider as equity. See, it's a basic concept about. Okay. If we go for preference share capital, it means it has a particular preferential right. That right may be with respect to payment of dividend and it may be with respect to repayment during the winding up. Probably you need to know this concept called as waterfall arrangement. Okay, those who have attended my class earlier, you might be knowing this concept or you might have known this concept earlier. Have read this term waterfall arrangement? Just imagine a waterfall. It comes like cascading, step by step. If a company goes for winding up, okay, there is two terms. One is what you call as winding up and one is what you call as dissolution. Okay, what is winding up? What is dissolution? Dissolution is the very last process. The company will become no more. Okay, which means we have this concept called as perpetual succession. When you want to terminate the existence of the company, we can terminate. And that termination, what happens in the dissolution? The company will be no more. What is winding up? All the assets will be sold, which means liquidated, and all the liabilities will be closed. Whether it may be asset equal to liability, or asset greater than liability, or liability lesser than asset. Sorry, the other way. Asset lesser than liability. It can be any way. It's very rare this may be the situation. Asset equal to liability. I have the asset worth 10 crore and have the liability, 1 crore and 1 crore. This is very rare. I'm not talking balancing the balance sheet. That's different. I'm not going for the accounting side. This is obviously an accounting side. Resolution is accounting side only, but I'm not talking in this way. Asset may be greater than liability. Then no issues. The rest of the asset will go to the shareholders because they are the shareholders, or actually we have to call them members. Members or the shareholders, they are the notional owners for the company. Even though we say the shareholders or the members do not have the right over the property of the company, they are still the notional owners. At the end, if the company is having any excess or surplus asset, to whom it will go? To the shareholders, members. So that's why they will be called as the notional owners. Members will be called as the notional owners. Okay. If it happens asset less than liability, then all the assets are sold. It's only 80 crores. But what's the liability? 100 crores. What they have to do? They'll check whether it's a company limited by shares or limited by guarantee. If it is a limited by guarantee, obviously the members might have given some guarantee amount. It will be taken. Else, so the members have, so let me go for a small figure. The members are given a guarantee where it totally pulls up for 5 crores. So already 80 crores is the asset I have and 5 crores is the guarantee amount I have. So I have 85. What about the remaining 15? Going on now. That's it. Creditors will get proportionally. See, that's the concept. What the creditors will think is, if I'm not planning for this, or if I'm planning to get this 15 lakhs in future, I may be losing the remaining 80 crores also. Most of the companies are closing because creditors are making a push. These concepts are not covered in Companies Act. These concepts are covered in IBC Insolvency and Bankruptcy Code. Earlier it was in 2039. Earlier it was in 1956 Act. But it is not now here. We have under Insolvency and Bankruptcy Code. The main reason is all the laws are pooled. If we go for 2013 Act or 1956 Act, it is dealing with winding up, liquidation, all the process related to companies and LLP. Okay. But instead, if we go for insolvency and bankruptcy provisions, code provisions, it's a code. What I have discussed with the term code, code is applicable for many laws. Act means to particular concept. See, we have Companies Act 2013. Okay, what does it say? It relates to all the provisions of the company. Okay, when we say it's a code, if I talk about this particular code, insolvency and bankruptcy code, it is discussing about an individual becoming bankrupt. It's applicable to individual. It is discussing on a firm becoming insolvent. Firm means partners and firm also. It is also discussing on LLP becoming insolvent. It is also discussing on companies becoming insolvent. See, if I talk about individual act, it will be called as an act. But I'm talking all the things with one single concept called as insolvency and bankruptcy. That's why it's mentioned as code. Okay. Likewise, if we talk about fraud, criminal activities and all, crime and all, we say it's a criminal procedure code or Indian penal code. Okay, fine. So we are now in waterfall arrangement. So let me come over here. So now there is only 85 crores for the company now. How much the company has? 85 crores. Okay. But how much the company needs to give? 100 crores. What the company will do? It will go for this waterfall arrangement. It will check. It will go waterfall means it will go in order. Step hierarchy will be there. First, all the statutory dues has to be closed. Actually, this concept is not there in your inter level, it's there in the final level, but still, you can please add to your knowledge. All the statutory dues will be closed. What do you mean by statutory dues? Company has the liability to pay towards its workers. What is paying to the workers? Salary, arrears if any is there, it has to pay. What else? Gratuity, PF contribution, all these along with the liquidators fees, everything is covered under statutory dues. See, statutory dues means covered under statute. There is a law for this. See, for gratuity, we have payment of gratuity. For salaries, we have code on wages. Is it okay? We have separate act, we have separate code for that, which means it's under the statute, it's a company's duty to pay the liabilities and other thing. After this, it will go for secured creditors. Okay, who has attached security and all. After this, it will go for unsecured creditors. Okay, it has borrowed loan, but it has not attached any security. If there is any amount pending, yes, it will pay. But now the problem is, among this 100 crores, how many are falling under this 15 crores? Don't know. After paying all these, now comes who? The owners. Equity shareholders are the notional owners. They come at the last category. Okay, equity shareholders. The preferred shareholders take the preference over the equity. Please try to understand. I am giving a stress on this word, preference over the equity. We are not going in this order for preference shareholders. We are going in reverse order. Who is taking the last choice? All the surplus will be taken by the, see, if it is total asset is 105 crores. Okay. And the liability, that is the closing thing is 100 crores. The 5 crores extra will be taken by the 4 and 5. Who are 4 and 5? Preference shareholders and equity. First preference will be given for preference. See, these persons are not the owners. Okay, these persons are not the owners. It's a liability. Okay, it's a liability. But what about these two cases? Obviously, preference shareholders, we cannot say we are liable to them, but they are the owners. Comparing to equity shareholders, they prefer more. More preference is given for. So, first preference is given for preference shareholders, then only it goes for equity shareholders. So, after providing all the surplus amount to the preference shareholders, which they deserve, then we will be going for equity shareholders, all the remaining. Okay. So, it's a beautiful concept. So, you can just make a note of this one, waterfall arrangement. You just go for Google search. You need not make a note of all this. You just have a note of waterfall arrangement. That will be helpful. Because we'll be coming across this concept when we discuss on debentures, charges. We'll be coming across all this concept. Okay. Okay. So here capital, when we say it's deemed as preference capital with respect to dividend and capital. We are not saying just capital alone. Preference is given for dividend also. If the company is having only little amount of profit, what to do? You need not give dividend for the equity shareholders because it's not mandated. But you have to give dividend for preference shareholders if issued. If a company has issued preference shares to the public, then it is mandated that they have to give the dividend. Okay. One more small concept. Is it okay? Hope I'm not overloading. If I'm too fast, please stop me. Is the speed okay? Okay. When we talk about preference shares, we have different types of preference shares. Let me go for one particular type. One is cumulative preference shares, another one non-cumulative preference shares. What do you mean by cumulative and non-cumulative means? Just now we were discussing about this dividend concept. If it happens to be a preference shares, then dividend is mandated that they have to pay dividend. Again, if you go and refer the balance sheet, the name of the preference share will be mentioned as 10% preference share, 5% preference share, which means this 5% is mentioning of the dividend amount. Okay. If a company is facing loss, see, dividend is a concept or where we define the term dividend as appropriation of profit. If you get profit or from the surplus, you give it. If there is no profit, how the company can give the dividend? I'm not talking about giving dividend to equity shareholders. I'm talking about giving dividend to the preference shareholders. How can I give dividend? Now, there comes an arrears of payment of dividend. Okay. This arrears, if it happens for continuous 3 years, okay, continuous 3 years means 3 consecutive years. We say this as consecutive, which means continuously happening 3 years. If the company is not paying dividend, this arrears of dividend will be accumulated, and this is what we call as cumulative preference shares. Again, if you refer the balance sheet and notes to accounts for that, you'll find that probably if I give the name, it will be mentioned as 5% cumulative. Again, you'll have this word non-redeemable preference share. Okay, usually it's non-redeemable only. We'll be having this term. So, what do you mean by cumulative? For 3 consecutive years, because of loss, the dividend is not given and the dividend gets pulled up. Cumulative. What happens here is when we say or when we find the difference between preference shares and equity shares, the major or very first difference is this preference shareholders will not get the voting rights. Preference are given with respect to payment of dividend and capital. But who gets the main preference for voting? Only the equity shareholders. Voting rights is not given for preference shareholders. This is the general concept. Now we'll come for the cumulative preference shares where the arrears of dividend is pulled up for 3 consecutive years. Automatically, this preference shareholder will get the voting right in the meeting. Okay, they'll get the voting right in the meeting. Okay, what's there? Obviously, equity shareholders will be in trouble, right? Because they are losing their rights also. If the equity shareholders are holding 100 shares, for convenience sake, I'm taking is 100 shares. For 60% of the shareholders say okay, which means 60 share voting gets favorable. 40 says not favorable. Okay, which one will be taken now? Favorable will be taken. Now, because of this arrears of dividend and all this concept, there comes another 50 preference shareholders, which means 50 voting is now included. And this 50 people join along with this 40% of the people and they say it's not favorable. Okay, now what this person will do? They'll be worried because the rights are taken away. Obviously, they will be happy. This remaining 40% will be happy because even though they are not favorable to resolution, because of this 50% of the shares, 50% of the vote where they get it from preference shareholders, now they are happy. But what about this one? If this concept is not there, if the company is a profit making company, obviously the 60-40 will be the ratio where 60% will be favorable. Now the company is getting a favorable resolution from the equity shareholders. Now it's a problem for the company. Okay. Not only this, if you go turn over the pages and refer to the definition of holding and subsidiary, can you please turn over and check holding and subsidiary definition? Holding as subsidiary definition, it says more than half of the, that is more than 50% of the voting right. Can you find that line? Can you find that line? More than 50%, that is more than half of the voting right. Voting right will be there. Earlier it was not voting right, shares. Can you tell me the page number, please? 13. Yeah, over here. Page number 30. On the basis of control, you can classify as holding and subsidiary company. When you say it's holding or when you say subsidiaries, when you check whether the control is over there. Okay. Control means either it can be with respect to the composition of board of directors or the second one. I'm here in the second point. More than half of the total voting power. Okay. Right. So you need not check the share holding of shares alone. You have to check the voting power zones. We have this accounting standards, right? Consolidated of financial statements. So far, the company was thinking that it was just an independent company. And because of this cumulative arrears of dividend, now the company will be having this voting control. Okay. And the company will be treated as a subsidiary company. Okay. So I'm not going too much of accounting side. So let me continue over here. So capital. So share capital. So generally we call it as capital. There are two companies where share capital will be there and no share capital will be there. But usually when we say, we talk about the company having share capital only. And rupees will be divided into shares of fixed amount. Usually it will be the amount fixed. It is a contribution to the stock. What do you mean by stock? What do you mean by stock? It's the pooling up of all the shares together. Pooling up of all the shares. Pool of all the shares. Probably there may be I may be holding myself A. I may be holding a 10 rupees share. Okay. How many shares? 10 shares. So how much I'm holding? 100 rupees worth. I may be holding some 5 rupees share. How many shares? 5 shares. So how much I'm holding? 25. Totally how much I'm holding. But it's not same shares. Okay. When we say or when we use the term stock, I'll not be saying it's 10 rupees or 5 rupees share. I'll be saying it's 125 rupees share. So if anybody asks me to transfer 2 rupees share, I can transfer. Which means it's not 2 rupees share, it's 2 rupees per share. Okay. See, if anybody is asking me to transfer, if I'm not holding as stock, I'm holding as shares. Okay. I'm not holding as stock. I'm holding as shares alone. What shares I have? Only two types of shares, two class of shares. One is 10 rupees share and one is 5 rupees share I'm holding. If anybody asks for 2 rupees, I cannot give it. But instead I'm holding it as a stock. It's a pool of all the denominations. So I can give 2 rupees. Why not? I can give for 50 paise share also. Yes, everything can be done. But I cannot decide that. Company has to decide. Company has to decide whether shares can be taken as stock, whether it can be converted to stock. Okay. Classification. Before going for classification. Okay, let me go for classification. Probably you know all these concepts, a lot basic concepts only. Classification. The term which we use as nominal or authorized share capital or registered capital, this will be the capital amount mentioned in capital clause of memorandum of association. Okay. This is following from definition to clause 8. It is the authorized capital authorized in memorandum of association, which means it is the maximum amount the company can issue shares for. Okay. The maximum amount of share capital of the company and stamp duty will be paid accordingly. It is fixed. It includes working capital or reserve capital, whatever is your way up to which one you're going to term as working capital or reserve capital is different. Okay. It will be mentioned as This way, it will not be in figures, it will be in wordings. The share capital of the company is 10 lakh rupees divided into 1 lakh shares of 10 rupees each. 10 rupees each is what you call as the face value or nominal value of the shares. And this 1 lakh share is the number of shares of the company. And this 10 lakh rupees is the share capital. That's the authorized or nominal share capital. So the denomination will be written as 1 lakh into 10 rupees, which is 10 lakh rupees worth. Okay. How much is issued among this? Only 60,000 shares are issued. Among the 1 lakh number of shares, only 60,000 shares are issued. Here now, 60,000 into 10 rupees, so this is 60 lakhs. So it's all okay, right? Then subscribed capital. How much is subscribed? All the shares need not be subscribed. Only 55 are subscribed. So 55,000 into 10, so 55 lakhs. How much is called up? Probably only for 5 rupees it may be called up to first call. Second call and third call maybe 2 rupees or 3 rupees or 1 rupee or whatever it is. So it's 55,000 into 5 rupees. Just half of this, 2 lakh and 75,000. Then paid up capital. How much is paid among this? Okay, probably 1,000 shares not paid. So we have done all these in company accounts, right? So that's the basic. Actually, why I'm discussing so much of things is we need to know when we discuss this in amendment of MOA. That's why I'm discussing. Okay. Okay. So this and all you can manage. This one, very, very, very important one. Often repeated question. I don't know why they ask so many times. Often repeated. Follows from section 60. Publication of authorized capital. Not only authorized capital. Along with the authorized capital, you need to publish the subscribed capital and the paid up capital. Where to publish? And clearly defines where and all you need to have these figures. In any of the following, see, it's an art of learning and reading law. If it says any, means it's not any, all. You have to understand in this way. If the company is issuing a notice, and in that notice, the company is talking about this authorized capital, then along with the authorized capital, you have to mention subscribed capital and paid up capital. It's not only the authorized capital you have to mention. You have, along with this, you have to mention these two. It's additional. Okay. If it is an advertisement, then you have to mention it. Any other official publication, mention it. Any business letter, mention it. Okay. Any billhead, you may be asking, even in the billhead, we have to mention all these. The concept here is in the billhead, if you are publishing authorized capital, it's mandated that you have to publish subscribed and paid up capital. If you're not publishing authorized capital, then leave it. Please try to understand. If you're not publishing authorized capital, then leave it. If you're publishing authorized capital, along with it, you have to go for other two also. Is it okay? So, even in the letter paper of a company, if it contains of a statement, the amount of the authorized capital, then the amount of the capital which has been subscribed, and the amount paid up in an equally prominent position. Which means what? It should be naturally visible. If you take up the letterhead, you should be visible. If only authorized value is visible, other two are not visible, means no, it's not. It's against law. Section 60 is very clear in this. And in equally conspicuous letter. If you are not following this, the company levies a penalty for 10,000 rupees and officer in default. So you know the definition for officer in default we have done already. 5,000 rupees penalty. Okay, it's a very, very important section. Probably you may expect this as a direct question or you may expect as a case law, practical case law. It's often repeated. I don't know why they are repeating so many times, but it's quite very important. You can just have a look. We have done with fourth topic. We'll go for Memorandum of Association and Articles of Association. Before continuing, let me go for a table A here. Okay. Actually, we have a schedule where we have separate tables. Table means it's nothing but a format where the listing is done and you have to fill the details. Table A is meant for Memorandum of Association of a company limited by shares. Okay. If you are trying to incorporate a company and it's a company limited by shares, you go and follow this table A. Okay. Whatever the table may be, whatever the company may be, the first clause will be the name of the company called as name clause. I request you to make a note of this one. It's very important. Even though it's very basic, our next class will be on this one only. Because we'll be discussing on amendment of MOA and AOA. It's very important. Okay. So first clause is the name of the company. In short, we'll call this as name clause. Second clause, the office where it is situated. Not the full address required. Only the state name is required. Okay, it's called as registered office clause, or the other name is situation clause. Okay, situation clause. Third is, what's the scope of the company? Okay, it's called as the object clause. You remember one of the characteristics, limitation of action of a company. We were discussing this 15 characteristics, right? One of the characteristics is limitation of action. The company cannot do all the thing. It is there stated in memorandum of association. It will define the scope of the company, what it can do and what it cannot do. Okay. So that's the third one, object of the company. In this third one, you have like A and B. A usually seems to be the main objects and B is the necessary one. Okay. Probably in future the company wants to amalgamate another company, as it can do so, and basic things. Okay. Fourth is what you call as the liability clause. So when we say it's table A, directly it's this fourth clause only. What's table A? It's meant for company limited by shares. If you go for reading this line, let me go have a read on this line. The liability of the member is limited. See, what is this company? Limited by shares. Limited. And this liability is limited to the amount unpaid. Yes, obviously. The unpaid amount is the limited liability here. If any other shares held by them. Is it okay? And this clause is what you call as the liability clause. Fifth one, share capital of the company. So this clause is called as the capital clause. Okay. Just now we are discussing, right, in wordings. The share capital of the company it will not be given in words. It has to be given in, sorry, it will not be given in figures. It has to be given in words. It will be like this only. The share capital of the company is how much rupees? 10 lakh rupees, right? 10 lakh rupees divided into how many quantity? Okay, how many number of shares? 1 lakh number of shares into how much rupees? Face value. 10 rupees each. 10 rupees each. Actually, it should be 10,000 shares. Okay, 10,000 shares, 10 rupees each. Okay, so this will denote the face value. Whatever the amount mentioned here, this is the maximum amount it can issue as shares to the public, not more than that. So this shows the limit how much it can take it from its investors. And sixth is the subscribers clause. Okay, you call this as subscription clause, or you call this as association clause. Subscribers clause or subscription clause or association clause. Actually, they are declaring, they are giving a promise, subscribing. See, there is a difference between declaration and subscribing. Okay. Declaration means something I know very confidently, I'm signing. Why you call this as subscribing here means there is no company incorporated. And we are saying, see, I am the subscriber to the MOA. I am saying there is no company incorporated. If the company is incorporated, I will get one share. Minimum at least one share. See, there is no such person, right? It's a proposed company. There is no such person. Without having that person in existence, how can I say I'll get the shares in the company? Please try to understand. This will practically not happen. Only legally it happens. That's why you're using this term called as subscribing. It's not a promise. Because how can you say promise with no company in existence? That's why it's called as a subscribe. But colloquially use the term as promise only. Okay, so this is called as a subscription or association clause. It's actually a declaration like given. I, whose name and address is given below, desires of forming a company in pursuance of this memorandum of association and agree to take all the shares in the capital of the company. All the means not all the number of shares mentioned against my name. Okay, actually there will be a column. So my name will be there. My occupation also will be there. Okay. And signature of the subscriber, the PAN details and other things, and the sign will be here. Okay. Fifth clause, called as the nominee clause, it will be applicable only for OPC. Okay. So, son, daughter of this person, resident of. Remember, for a one person company, even the nominee should be a resident person. They need to have the residential capacity. Okay. Aged shall be the nominee in the event of the death of the soul. Okay. So, probably I just have this all the tables. This is table A, which is dealing with company limited by share. This was the one I was discussing in detail. See, whenever you see this table A, automatically it's reflecting what type of a company it is. What type of company this is? Company limited by share. Directly go and refer the fourth clause. It says the liability of the company is limited and to limited to which amount? Unpaid amount. If you go for table B, it says that memorandum of association of company limited with guarantee and not having a share capital. So if you go and refer this fourth clause and not having share capital, right? Memorandum of association of company limited by guarantee and not having share capital. See, fourth clause, the liability of the member is limited. What about the share capital? There will be no clause for share capital because it's a company not having share capital. Okay, see what's the fifth clause? Fifth clause, fifth clause will be the guarantee clause. See the table 1, what's the fifth clause here? The share capital of the company is dash rupees, etc. But if you go for this one, you'll not have the fifth clause because it's the not having share capital company. What's the fifth clause here is about? Guarantee clause, right? What's the guarantee clause? See, every member of the company undertakes to contribute to the assets of the company in the event of its being wound up. When you give the guarantee, not immediately when you need of money. When you need of money, do the winding up stage. So during the wound up, while he is a member, okay, when this liability arises, while he is a member or he was a member within 1 year period of time. Okay, you can please make a note of this one. He is a member currently at that time. It is his name is there in the register of members book record, or he was the member within 1 year period of time. Okay, 1 year backwards. Okay. So to the cost, charges, expenses of winding up and so on. Okay. Probably I'll share this one pager to you. You can just have a look. It's quite important. We don't have direct question, but related to amendment of MOA and AOA, we require all these points. Shall I take over? Then, if you go for table C, it's memorandum of association of company limited by guarantee and having a share capital. So, if you go and refer here, what's the fourth clause for? Please join with me here. Anyway, I'll share this page. What's the fourth clause? Liabilities limited. What's the fifth clause? Every member undertakes to contribute, which is a guarantee clause. What's the sixth clause? Share capital. Then the seventh clause, subscription clause. If you go for table D, memorandum of association of an unlimited company and not having share capital. Unlimited means the liability of the member will be unlimited. Go for the fourth clause. This is the fourth clause, right? This one. It's mentioned as unlimited. Okay. Not having share capital. So there will not be a mention of share capital clause. Directly they'll go for subscribers clause. Fifth clause is the subscriber clause. Okay. So don't memorize as first clause, name clause, second, don't memorize in this way. First three will not change. Name clause, situation clause and object clause will not change. Obviously, fourth clause is going to be a liability clause. If it is a guarantee clause, then fifth clause will be related to guarantee. So the numbering will be slightly changed. So just don't memorize like fifth one is the share capital clause. Don't memorize in this way, okay? But usually we'll go for discussion with respect to table A only. And last is memorandum of association of an unlimited company and having share capital. So what's the fourth clause? Liability of the member is unlimited. Fifth clause, having share capital. So capital clause. And sixth one, as usual. Is it okay? Done. Okay. Yes. Topic number 5. MOA and AOA in detail. Section 6 gives a clear clarity of how the MOA and AOA has to be treated. It says Act overrides MOA and AOA. Whenever you find any inconsistency, which means there is a clarification needed, which one is prevailing, which one is not prevailing, which one I have to treat it. This is my company, this is my MOA. So I have to go with the lines given in the MOA, or I have to go with the lines given in the Act. No doubt, it gives a clear clarity. Section 6 says first priority for the Act. Then you go for MOA. It's a charter document of your company. And when we say AOA, it's actually supporting the, we call it as bylaws, supporting the MOA. MOA is the document which is linked with the outsiders. Outsiders means to the creditors, to the suppliers, and so on. That AOA is to the insiders of the company. Insiders means directors. What is their role? Who are the directors? How the resolution has to be done, etc., etc., etc. Okay. So this is the order. Go with the Act, then give preference for MOA, then for AOA, then for the resolution. What is the resolution passed? It will be stated clearly, then go for the resolution. If you find that anything is there present in, okay, anything is there present in MOA, but in the Act it says illegal, which means in the Act it says you cannot do it, then it becomes void. Please understand, it's not completely void, it's void to that extent only. So far, how the provisions are dealt, depending on that availability or validity, that will be considered as void. Okay. How can you say this memorandum of association means it's the charter document? Okay, charter document. It's also called as public document because it is open for inspection. You can just log into the MCA website. Okay, register of companies. You can go directly and you can go for public inspection. You get all the documents downloaded. Okay, you have to pay a nominal fees of 300 rupees, where it will be open for 3 hours. You can pay some 300 rupees and you can download all the documents, MOA, AOA, all the resolutions passed, uh, all the charges created, debenture related, everything can be downloaded, which means it is a public document, open for inspection. This is the document which defines the constitution. We say it's a private company or public company from where? From the name of the company, right? Obviously, this is completely defining the constitution, the object, what is the scope of the company, everything is there in the MOA. It edifies on which the structure of the, edifies means it defines, declares, on which the structure of the company stands. It is limiting the action, this is often asked question, it's limiting the action of the company. The company cannot do everything. Okay. If the company is not following the memorandum of association, we call this as doctrine of ultra vires. We have this later we'll discuss on this. It describes the powers of the shareholders, creditors, and others. It's a presumption of knowledge. Please highlight. If anything is stated in the memorandum of association, all the other points okay. Usually the confusion arises over here. Object of the company. What's the business of the company? How the lines are stated as object. There will be some grammatical error, whatever it is. What are the objects defined in the memorandum of association? Those are the business carried over by the company, right? Those are the business carried over by the company. What do you mean by presumption of knowledge is? Who has framed the sentences? Obviously, CA, or CS, that's different. Don't go for professional capacity. Once the company is incorporated and the certificate of incorporation is issued, the role of the company secretary or cost accountant or something is over. Done. My point here is who started this or who gave this idea or who started this one? Subscribers and promoters. What knowledge they had in doing this business? You have to take their knowledge, not your knowledge. You have to take their knowledge, not your knowledge. You have to understand in their sense. So it's a presumption of knowledge that everybody has understood. They have taken the document, everybody has understood. Ultra vires act is prohibited, which means we have this limitation of action. If you're doing anything outside the scope of the MOA, then it becomes ultra vires. Ultra vires means it becomes void. Okay, null. In fact, you can use this word in a more appropriate way as void ab initio. If there is nothing in such a way, how can you execute it? It's called as void ab initio. Okay, you can please make a note of this wording, void ab initio. That's why you use the term as not restricted, prohibited. And it's a foundation for the company. It says what the company is. Okay, can you just go through all these headings? Actually, I've gone through, not in detail, I've just gone through and given an idea like, can you go for all the clauses? Please, can you go for a fast glance? So, clauses of MOA. Actually, I have not dealt in very detail, but these are all basics I needed for amendment. That's why I have done here. Okay. Clauses is nothing but what are the contents we need to have in MOA. It's all compulsory clauses. You cannot skip anything. And you can just say it's a condition for a company to incorporate. You need to have all these details. Okay. When you talk about the name of the company, usually it will end it with limited, private limited. If it is a OPC, then one person company. If it is a Section 8 company, definitely it will have the word called as Electoral Trust, Foundation, Forum, Association, Chambers, Confederation, Council, etc. Okay. Whenever you give a name for the company, it should not be identical or it should not be resembling another company's name. First point. Second point. Also, it should not constitute an offense in central government's opinion if they find like anything undesirable. Okay. Or you are using some expression that's affecting the dignity of a nation. So you should not use it. Other prescribed ones, unless you get the previous approval. Okay. That's all about the name clause. When you go for the register office clause or situation clause, it's just enough that you mention the state where it is situated. You need not give the full address. Object clause, what is the scope of the company? Yes, please make a note of it. It's often asked. Shall change its name in its activities. My company is trading related. I'll include the name trading. My company is some related service. I can include the name service, whatever the thing is here. Okay. I'm going to sell toothpaste. I can use the name toothpaste in the company's name. I can use it. Because seeing my company's name, they need to understand what is the business of the company. If I name a Singer Academy, all the persons are coming and inquiry whether you teach vocal or only vocal is taught or any music, other dance is also taught. Okay. So I have planned. Singer is not that singer. Okay. I have attended so many inquiry calls. Liability clause, limited by shares, limited by guarantee, obviously can include unlimited. Capital clause, authorized, you should share of fixed amounts as not applicable for a company not having share capital. Association or subscription clause, every subscriber shall take at least one share. Please understand, at least one share. This is the act. But usually, practically, what we do is we'll not go for one share. We'll usually go for 90 to 10%. Okay, that is if it is 100 share means we'll go for 10 shares and 90 shares. Usually will not go for 99 and what. Okay, that's a very least case. And nominee clause, this happens only in the case of the one person company. Is it okay? Yes, often repeated. What should be included in memorandum of association? Usually it is printed in paragraphs consecutively numbered. We need to understand which clause is which one. It should be signed and subscribed by the subscribers, and also there will be a witness. Okay. Company enters through its agents. Please highlight. X is a company, Y is an individual. They both want to incorporate a company. Y, being an individual, can incorporate in its own capacity, but X, being a company, being an artificial, it cannot. It can be a person, it can be a member, it can be a subscriber, but it cannot enter as a person. Okay. We need an agent. Who's the agent? The board of directors of X company. So this X company will be holding a meeting and a resolution will be passed saying that Mr. X, the director of the company, will be the person, the authorized person to sign all the documents and other things. So this new company, what's the company name? Shall I name it as XY company? So this XY company, when going for this memorandum of association, under the subscription clause, it will have two members. One member is Y, the individual person in the individual capacity, and second person, actually it's X company, but it's not X company. Who's actually going to sign on behalf of X company? Mr. X, in the not in original capacity, not in individual capacity, but in capacity of the director of the company. So on behalf of the company, he will sign. Minor is not competent, but guardian in his personal capacity, it's not contrary to the act. We are not discussing Indian Contract Act. When you go for Indian Contract Act, most of the acts says minors cannot enter into a contract. But here, what law says is minor is not competent because it's after all like entering into a contract, but guardian in his personal capacity, they can do so. Okay. And all other documents should comply with MOA, which is having the overriding effect. Section 6 says Act has overriding effect over MOA and AOA. And here we say that MOA is having an overriding effect with respect to AOA and other documents. Is it okay? This is all about MOA. Shall I take over with Articles of Association? Articles of Association, it provides the rules and regulations for internal affairs of the company, internal business. It provides the bylaws of the company. Okay, the supportive rules and regulations we need to follow. The directors and officers are required to perform their functions as regards the management, its accounts, audit, everything will be done as far as AOA only. Can just go through this case law. Probably I'll go for the second case law. Asbury Railway Carriage and Iron Company Limited. In this case law, it is mentioned the nature of AOA is a supportive document of MOA, subsidiary to MOA. Okay. What are the things defined in MOA? Accordingly, only you have to take the language of AOA. If you get a different language, which means you get a different meaning, if you get a different understanding in AOA, don't take it. If you have to get the understanding, means please get clarity over MOA, then only you can get the clarity over the AOA. Okay. So probably it's defining the duties, rights, powers, and all. Okay. What is this company is about is it's a railway carriage company. It's going for manufacturing of railway carriages and all. This railway rails and all. Okay. This company, what it is doing is financing another company for um, some railings. It's not actually manufacturing; it's financing. Financing is not the scope of the company. It's not mentioned in MOA, but the company is actually financed, and it has been declared that it is against the company's limitation. That is ultra vires. So it's a ultra vires act. It's why a big issue. Okay, so can check this one also. It says the AOA is the business document, domestic management of the company. Okay, let me go for section 5. Quite important. Please make a note of it. You may expect this in the exam, especially CMA inter. Contents and model of AOA. It will contain the regulations of management, how the management has to be done, how many directors should be there, etc., etc. See, if you check all the clauses of MOA, you did not find anything about the directors. Did you notice? We were checking about the name, we were checking about the situation clause, etc. We did not find how many directors should be there. Act says for a private company, 2 directors sufficient, and for a public company, 3. OPC, 1 director sufficient. But how many directors my business needed? Please try to understand. I'm planning for a big company. 2 directors not sufficient. I need to have at least 5 directors for 5 divisions. So I'm planning for the 5 directors. There should be a must that there should be 5 directors throughout my company's perpetual succession period. So in this case, I'll be adding a clause where there'll be a mandate for 5 directors. It's not against law. This provision is what you call as the entrenchment provision, making it stronger. As a company, you have the liberty because your business, we can do it. Okay. But instead, access for a public company, you need to have 3 directors. But you feel, I'm not going to do anything with the company. See, I'm a dormant company. I'm just going to hold the IPS. I'm going to hold the asset. I'm not going to do any significant accounting transactions. So what I'm planning is let there be 1 director. No, you cannot go against law. You cannot call this as entrenchment provision. Entrenchment is you're making the law stronger means then it's fine. If you're doing something against the law, it should not be done. Please try to understand. Hope it is okay. Let me come again. For a public company, there should be a minimum of 3 directors. I plan for my company, for my development of my business, I need 5 directors. Yes, you can do it. It's not against law because Act clearly says minimum 3 directors. So you're adding more stronger provisions for a company. Yes, this is what you call as entrenchment provisions. But instead of 3 directors, you're planning only for 2 directors and it is a public company, or you're planning for 1 director and it's a private company or public company. It's against the law, which cannot be done. And you cannot say it's an entrenchment provision. Likewise, while passing resolutions, we have ordinary resolution and special resolution. Okay. If you're okay with this concept, please take it. Act says you can pass ordinary resolution, but you say that I want to pass special resolution. Okay. Which means you're adding more stronger to the law. Yes, it's entrenching provision. Act says you have to pass special resolution, but you say ordinary is enough. See, how can you go against law? Against law is not entertained. So that's not allowed. It becomes void. Okay. Then How you have to include the entrenchment provision? Yes, at the time of formation you can do it, or else you can amend it. Private company, all the members are needed for amending. For public company, special resolution is sufficient. You have to give a notice to the registrar relating the entrenchment provision, what you are providing and all, and forms of the AOA. So we have this schedule for MOA, right? Table A, Table B, Table C. Likewise, we have the tables for AOA referring to table F, G, H, I, and G. Okay. Model articles, you can adopt all. Model articles, there will be a model presented will be there, and you can adopt all or any as per your applicability. Okay. And yes, company register after the commencement not takes. Okay, this is a normal point. Okay. Contents, yes, contents exclusion, which means you want to include or exclude wholly or in part everything. You follow from table F. Usually we go for the first table. When we talk about MOA, we go for referring table A, which is the first table. When we go for referring this one, we go for table F. It's very, very important where you go for adopting the preliminary contracts. What do you mean by preliminary contract? Is very simple. I'm going to incorporate a company. Okay. I want to have an office in a building. I want to enter into a lease agreement. With whom this lease agreement will be entered? Obviously, lessor and lessee will be there. Who is the lessor? Owner. Who is the lessee? The company is yet to be formed. Proposed company. Who is the lessee then? Director, the proposed director, or the subscriber, on the behalf of the company, this person will be entering as a party to the lease agreement. Okay. This is what you call as preliminary contract. If this contract is not adopted by the company soon after the incorporation, this will not be a valid one. My company is a business where it is doing this software development and all. Okay. And we need to buy laptops and other devices, and we are investing so much. All these are entered into contracts before incorporation. This is what you call as preliminary contracts. Preliminary, before. Or we use the other term called as pre-incorporation contracts. Probably I may use this term. In the balance sheet, under the liability side, along with the debentures and other face items, you might have used this term, preliminary expenses. Have you used? Probably in how many years you're going to reimburse these expenses. Can take many years, that's different. All this has to be mentioned in AOE. It's not mandated. Preliminary contracts are mandated that you have to adopt it. Preliminary expenses, you want to return back to the directors and subscribers, or you just close out. It's depending on the directors and other people. Okay. Share capital, yes, variation of rights, what type of capital, equity or preference, number and value of shares, everything has to be gone in detail. And issue of preference shares, yes, it has to be. Preference shares will be there or not there in the MOA. It depends on AOA's clause. Okay. When you go for the share capital clause, it says only share capital. I don't know how far you noted. It doesn't mean as equity share capital. Did you notice that? The when you started the lines, the share capital of the company is it's not mentioning equity or preference. It's mentioning a share capital. If the company is holding both, that is issuing both equity and preference, then it has to mention below equity and preference. So there'll be a two line. Okay. So with respect to shares, you have to talk about allotment of shares and how many call money are going to collect it. So first call, second call, or third call. What is the lane on shares, transfer, transmission, nomination, forfeiture, buyback? We just recall all the company accounts. You'll get all it. Okay. So all these. And regarding the directors, appointment of directors, what is the delegation of powers? Nominee directors, managing director, whole-time director, manager, secretary, all these. Okay, I'm not going line by line. Okay, you can just have a look. What's the voting powers? What are the proxy rights? How about the general meetings? How the proceedings has to go? What is about the adjournment, voting rights and proxies? See, all this will be given or you're going to consider in AOA, but not against the Act. See, Section 6 says you have to go along that. You cannot override. Okay. Then what about the common seal? Is it mandatory? It's not mandatory. So it's option. So what is the option there? And what are the borrowing purpose, accounts and audit? What about the indemnity, audit committee, dividends and reserves, winding up and secrecy? Okay. You have to maintain all this. So we have done with this one. Key differences, I just request you to go through. It's very rare question, but just for knowledge sake, I have given. Probably doctrines, I'll discuss in the next class. Doctrines and amendment, I'll discuss in the next class. Okay.